Some final things here to consider about long-term care planning. There is no standard plan. As you learn about these different types of plans that are available on our website, keep in mind that there are no standard or what we call off-the-shelf plans. Instead, we're going to design those long-term care plans and we're going to customize them based on your eligibility, your financial situation, so that that plan that you put in place is right for your particular situation. Another thing I want you to consider is joint policies versus individual policies. A joint policy allows two people to pull money out of one bucket. So that's what we call joint, two people accessing one long-term care insurance policy. An individual policy is just going to be one person on that policy. And so individual policies will limit the benefits to one. Joint policies, we can have two accessing those same benefits. Tax deductions for premiums. Individuals may pay premiums up to IRS limits out of a health savings account. So that's a way that they can use tax-free money to pay some of the premiums. Now those amounts are going to be adjusted annually and they're based on your age. Individuals may deduct premiums if their out-of-pocket medical expense exceeds 7.5% of their adjusted gross income, and that's as of 2023. Businesses may deduct premiums up to those IRS limits, so the same limits that the health savings account. So a business owner, a sole proprietor, an S corporation, a partnership can deduct some of those premiums as well. And if you're a business that is taxed as a C corporation, you can write off 100% of eligible long-term care premiums. You're not limited to the IRS annual limits based on age. Be careful of averages. This is another thing I want everybody to understand. There are many reported figures out there on average cost, length of stay, how much costs are in your particular area. But remember, average claims paid by an insurance company now are 4 years. So that's how long the average claim lasts from an insurance carrier's point of view. However, 1/3 of those claims, the people that file for long-term care insurance, are going to pass away within the first 12 months. So we also have, you keep that in mind. So that just basically means if you make it a year, you're probably going to make it closer to 5 years. And we have claims that are over 15 years old. There's an active claim that's approaching 20 years right now. So be very careful of the averages. Make sure that you design a plan that will provide meaningful protection based on your financial situation, meaning the more assets you have, the more income you have, the more you have to lose, the more unnecessary taxes you might pay.